Fresh signs of weakness in the tech industry, more rounds of sweeping job cuts and hiring freezes. Amazon shares lower as it pauses corporate hiring in anticipation of an economic slowdown. In the ride-hailing space, also Lyft cutting 13% of employees, which amounts to roughly 680 workers. Now, it's the second round of cuts this year and comes after a hiring freeze was announced back in September. And payment processor Stripe says it's getting ready for, quote, leaner times, cutting more than 1,000 jobs. It all makes for grim reading. Yahoo Finance's Dan Howley has the latest here. So, Dan, break this down for us.
Yeah, it really is kind of this all-around push that we're seeing in the tech industry for some kind of cost-cutting measures, and it seems like right now they're going for employees. So, as you said, we had Stripe. They're basically announcing, the CEO saying they're going to lay off 14% of their workforce. They said that they overhired for the world that they're in, and it pains them to be unable to deliver the experience that they had hoped. Lyft saying they're laying off those 683 employees. That's about 13% of the workforce there. We also had Amazon announcing that they're having a hiring freeze. This is new incremental hires that they're going to be freezing. They had previously said that they were freezing corporate hiring for its retail business. So another kind of freeze there. And then we've had some reports that obviously Twitter is going to be doing some layoffs. This isn't necessarily related in the same way to the kind of spending cuts that other companies are doing. But in a way, it is. They're looking at potentially 50% of the workforce being cut as Elon Musk assumes control of the company. So, you can only imagine the other kinds of moves we're going to see from companies as far as hiring freezes or straight up layoffs. Right now, a number of them have said that they will do hiring freezes. We had Intel previously saying that they were going to be cutting positions, but they haven't come out with anything concrete yet. But, it seems like this is going to be something that we'll have to continue to follow, as we did during the summer when the same thing was happening.
Yeah, Dan, I guess compare what we're hearing now to what we did here in the summer. Is there anything different just in terms of the rhetoric that's coming from some of these larger companies? And I guess the biggest headwinds facing the tech industry, we talked about the slowing advertising business. Obviously, that's having a direct impact. Also, rising competition, just to name a few of the challenges out there in front of these larger companies. Yeah,
I think the rhetoric is that they're trying to ensure that people recognize that it's a short-term issue, not a long-term issue with these companies. So, Amazon saying that while they're freezing hiring for now, they're still going to be hiring in 2023. A lot of companies saying that they're going to be backfilling positions. So they're not going to just stop hiring wholesale, but they are cutting back. And I think, what this really is their reaction to the macro environment now, recognizing that there will be improvements in the coming months or quarters. It's just not happening right this second, and they have to do something right this second. And so what they're doing is they're going for these types of job cuts. And, they've recognized, obviously, that they're going to have to pay for some of these, especially in the case of, companies like Lyft. But, as far as the freezes go, I mean, look, I'd rather my company be freezing hiring than laying off.
Yeah, certainly if you're a current employee, that's a much better scenario. And obviously, these tech names have been under pressure since the start of the year, and more headwinds as the Fed continues to raise rates. So we will stay on that story. All right, Dan Howley, thanks so much.